Hi guys, good afternoon and welcome to Moneycontrol. I'm Karunya Rao and with me is Manisha Gupta and the big talking point of the day is crude oil prices. And for the first time in 2022, they've been moving in Contango. Before anything else, tell us what that means.
Okay, so there are two ways of looking at a price move when you look at it in futures. One is contango and one is backwardation. Contango is when the front month future is cheaper than the further month future. And that usually is what happens because as you go longer, there is that transportation and stocking cost is what you start looking at. When it's a backwardation, that means the current prices are higher and the future prices are lower. That means there is less availability and is the reason people are ready to pay a premium for the commodity right now, right here. And later on is something that we look at, in later times. So contango means that there is not much demand, there is more availability right now, and is what the sheet was looking at. That is what is contango and backwardation is, and that is what we've seen after the recent profit taking in case of the prices.
Is it happening because there was news and speculation of OPEC increasing output?
Well, yes, that was quite a night, wasn't it, in New York session yesterday when Wall Street Journal came out with that report, which was torn apart by the investors.
Yeah.
But having said that, the market is just so vulnerable and so shaky that we did see prices react to that report. Of course, the report suggested that there's going to be an increase in output from OPEC. Why would that happen? Because we're
Yeah.
looking at prices go down, we're looking at
Surplus,
demand
yeah.
concerns, and there's a surplus in the market. And OPEC has been talking about cutting output. They have cut output by 2 million barrels per day in the month of November. So the report was clearly, shredded, torn apart by the market. And by the closing yesterday, we were back 5%, and we were even 0.5% on the higher side.
Right. And is Russia also on the same page? Are they also looking at production cuts?
Oh, they are. And, Russia has two ways of looking at it. One, if there isn't enough demand and if there isn't enough price rise, then there is no point producing so much. And the other thing is that come 5th of December, there also is a price cap coming in on Russian oil from European Union, from the G7 countries, etc. And Russia has reiterated, if you put a price cap, we don't give you crude oil. So
Yeah.
there's just so much happening in the markets right now.
And how important is the China factor again in all of this? Because once again, the COVID cases have started spiking.
Oh, well, yes, 23,000 at the last count, and one COVID death, the first one in last 6 months, does not make matters any better here. And China, while has been cutting import and the demand has been declining for the month of December, China already has told Saudi Arabia that they want nearly 40 to 50% lesser crude than what they have asked for the month of December. So clearly, that's showing in numbers too.
And all of this augurs well for us, at least falling or cool off in crude oil prices definitely augurs well for the market and the sentiment overall as well. So, is that what's also aiding to the overall momentum?
It sure is. But Karunya, even as there are more supplies, even as OPEC and IEA have said that they're looking at lower demand growth in this year and the next year, China's not buying as much as well. Even after all of that, we have seen Brent manage to hold around $90 a barrel. I mean, if there is a harsh winter, if there is more geopolitical tension with Ukraine and Russia, if there are more sanctions coming in, if Russia says, I will not give you crude to European Union, I mean, we are clearly looking at higher prices in that case because we're already at 90 with all of this bad news factored in.
So, can traders now make the most of this contango opportunity that presents itself right now?
It sure is that case. So the next few days are going to be very important because on the 4th of December, you have OPEC and allies meeting up where they will review the demand, production policy, etc. 5th December, you have this price cap coming in. 14th December, you have the US Fed policy. So the first half of December promises
And
to
we
be.
have our own RBI MPC.
Oh, well, yes, that too. So the first half of December promises to be eventful. After the US Fed meeting, I think everybody goes into that
Holiday
festival and holiday mood. So I think the next 1 month, next 25 days is going to be very volatile, and that's exactly what the street is preparing.
So, are traders buying right now at current levels?
They are, and the markets do believe that it perhaps is a $2 of a decline and a $4 of a jump up in crude prices from here. So that's exactly what is being traded.
All right, there you have it. The entire phenomena that's impacting oil prices right here, right now, explained. And like she said, first half of December definitely going to be very, very action packed, especially from a crude standpoint. So stay tuned for that. We'll of course get you more updates. For now, that's all. We'll be back again tomorrow with a fresh update on commodities.